Well, good morning, and thank you for joining us for our very first Economic Scene Live webinar. Economic Scene's being brought to you by the Volusia County Economic Development, and we developed the program as a offset from our Economic Scene email newsletter. You'll see that as time progresses, we'll be sharing information between the two. This new live video platform has been designed specifically to provide information to our local businesses on an ongoing basis. And in addition to this platform, last year we launched VolusiaBusinessResources.com as a one-stop resource to also serve the business community. So please be sure to check that out as well. And then finally, we've launched the Volusia Business Resources on Facebook as well, so you can connect with us there. Now, before we begin with the Q&A portion, a quick reminder that you'll be muted for the duration of the event. The webinar is being recorded and will be shared for those unable to join us today. We did receive several questions from business owners, and if time allows, we'll try to get to those questions at the end of the presentation. Now, on to today's topic, Paycheck Protection Program Round 2, do you qualify? We're pleased to have two experts to provide answers to commonly asked questions on the PPP. Tom Daly, Director of the Small Business Development Center at Daytona State College, and Mike Sibley, partner with James Moore & Company, CPAs. Tom is a seasoned business professional who coaches entrepreneurs to help them accomplish their business ambitions and reach new heights. His clients include all businesses, from startups through mature, thriving businesses. Welcome, Tom.
Thank you. Good to be here.
Mike Sibley has 20 years of experience as a certified public accountant and is the partner in charge of James Moore & Company's Daytona Beach and DeLand offices. He's served organizations representing tons of industries with a special interest in manufacturing. Welcome, Mike.
Thank you.
So we'll share Tom and Mike's contact information with you at the end of the presentation, and you can reach out to them directly if you have additional questions. All right, let's get started. Tom, if a business hasn't previously received a PPP loan, are they at a disadvantage for this round?
Actually, on the contrary. So the second draw, and what's good about this, by the way, is that initially in the first draw, it was a little bit chaotic in the beginning. And one thing that banks do very well is put process into place. So for this second go around, should be much more orderly, and that's a good thing. So for those folks that didn't take advantage of or did not apply for that first round PPP, they actually go to the front of the line. So the priority went underprivileged businesses first, and that actually opened only to them. And then depending on your bank, your lender, this week, or actually some early adopters started last week, they will be opening up those applications, and priority will be given to those businesses that did not apply for the first draw. So they'll be first in line. So you want to get there as quickly as you can. You should have a good relationship with your lender and make sure you're reaching out if you're in that category, because you will be given preference.
That's great. And once they get the application in, is there a timeline on how it progresses through?
Yeah, most definitely. I know Mike's going to get into the guts of some of the rules and regulations, because they changed a little bit. But this second draw starts now, essentially, and the deadline this time is going to be March 31st. So you don't want to dilly-dally. You definitely want to jump on this opportunity if you qualify.
It's great information. Mike, as most of the businesses are probably wondering, who can actually apply for the PPP?
Yeah, that's a great question. And as Tom mentioned, there's really two rounds. It's going back to your first round and your second round. And so what that means is if you didn't apply and didn't receive funding the first time around, meaning from March of 2020, April of 2020 through August, that time frame that the first round of the PPP was open, you can qualify under that first round. Meaning, so the criteria is under 500 employees, an economic uncertainty, and of course there's some nuances to those 500 employees for franchises and restaurants and things of that nature. But they also opened it up to now allow 501c6s to apply. So, for example, your chambers, your associations, your membership organizations that were not qualified as a 501c3, now they qualify. And to add on to what Tom was saying earlier, they have put priority. We've seen some of our own clients and some organizations we're members of apply and get their funding within 7 days. That's very, very quick compared to what's on the second go round. For those who did receive a loan the first time around, there's a second draw, and the criteria for that is different. It's you have to have less than 300 employees. You have to have a loss, and we're going to talk about probably this a little bit more, but you would have to have a loss in one of your quarters greater than 25% compared to 2019. And you've got to face the same, you have to have an economic uncertainty. And of course, the rules are a little bit different for restaurants and hotels. So there's some nuances in there. But if you're an organization that's under 300 employees, you received your first round, you may qualify for the second round if you still have that economic uncertainty that many businesses are facing right now, obviously with the pandemic continuing to go on. But there's still some more specific rules in there, but generally speaking, if you fit in those categories, you're going to be able to qualify for the second round.
How do they document the loss? I mean, what kind of paperwork needs to be provided?
Sure, the SBA and the Treasury have issued a lot of guidance on this, and so there's several different forms that could apply. So for businesses that are really small businesses that maybe don't have quarterly financial statements, they can provide bank statements that show a loss of deposits compared to a previous quarter. Now, it does have to be either a calendar quarter, so in 2020, a calendar quarter 1 or 2, 3, or 4, compared to the same calendar quarter the year before, but they also allow now on an annual basis. So you can use bank statements, you can use quarterly financial statements that demonstrate the loss of revenue compared to 1 year or before. You can also use it on an annual basis. And they said because annually, if you're down 25%, so you might be able to use tax returns, for example. Now, maybe not many people have their tax return done now, but they've got up until March 31st to apply for this. So that may be something. Now there's some specific regulations about what does gross receipts mean, what does revenue mean. So there's some nuances there that you have to make sure. But one thing to make sure you do is, let's just say you submit a quarterly financial statement. Sign that financial statement as certifying it's correct. That's one of the requirements that the SBA came out with, is they want you to certify that to make sure that you're submitting document and you're certifying that it's accurate.
That's great information. Is there a maximum amount that they can apply for?
Yes. So the overall max in the second round is $2 million. The first round was $10 million per group of entities, per affiliated entities. But each business, with the way that you're going to calculate it, is based on your average monthly payroll. And they gave you the option to use your 2019 average monthly payroll, your 2020 monthly payroll, or the last 12 months. But they gave you the 2020 and 2019 option because that makes it a little bit easier. And what we've been looking at is where's your highest payroll? A lot of people have payroll down compared to 2019 because obviously if they were down 25%, it's hard to keep people up to the same levels as before. So once you have your monthly average payroll costs, now payroll costs include employer portions of health insurance, retirement payments, state and unemployment taxes, and other insurances that can all be combined into gross wages. And you take the average over 12 months and you multiply it by 2.5. So you get 2.5 times. Now restaurants and hotels and those that have an NAICS code of 72, starting with 72, can get 3.5 times their monthly average payroll.
So a lot to keep track of, though, to keep, make sure you have all your paperwork in place.
Right.
So Tom, that brings me to you. Considering all of the information that's necessary, and while we understand it's a much more convenient process now than it was prior because they've just improved on the process, how does the application process work? What are the steps that our businesses would need to take?
Yeah, so again, it's far less chaotic. The banks have done a great job of kind of understanding the guidance from SBA and have kind of just integrated it into their own systems, so they've made it much easier. Little commercial for all of our small businesses. I always say your team of advisors should be close to you at all times. That includes your accountant, your attorney, and your lender. This is a great time for that because you're going to have a conversation there. So the process is pretty easy. If you go to the SBA website, the Paycheck Protection Plan website, everything's been updated and you can see what a sample application looks like. It's very simple. But more times than not, what's happening is the banks themselves are actually opening up their own portal with their own application, and most of the time it can be done remotely online. And that's a good thing but their whole process takes over. And I just like everybody to understand, because the way these Paycheck Protection Plan loans have gone is the bank is lending their money, right? So it's not coming directly initially from the federal government. They're lending their money, which reduces their capacity to lend for other things. So it behooves them to make sure that all documentation is in order. Everything that you're providing will be accurate and up to date, all the guidance that Mike's giving you. And that way they can say, yeah, this is a legitimate loan, so that when it goes out and we come back for forgiveness, the bank can then get approval from SBA and get their money back, essentially. So just in general terms, what's really important is that you have your payroll records in order. Whatever period, like Mike said, is at your advantage, whether it's a 2019 or a 2020 or last 12 months, whatever time frame you're using for your average payroll, make sure that you have documentation for that. A lot of times your payroll processor is already kind of gathered all that for you, so it makes it very easy. Make sure that you have your financials in order. Again, you probably don't have your 2020 taxes, but you should at least have some idea of what your quarterly financials are. Anything that you might be asked a question about to document what you're doing, because this go around, as Mike said, you're going to have to demonstrate a 25% reduction in revenue, at least in one quarter, 2020 over 2019. So just have those things in order. The application process is easy. Reach out to your lender, best thing you can possibly do, and they'll give you the right guidance. But more times than not, you're going to be applying online in their portal.
Great, great. So Mike, let's take a step back for a second. And those businesses that had applied before and kind of understood that process are now going to be going through the revised process. What are the changes that they're going to experience as they go through that?
Sure. So a few things. One of the things I will mention to jump off of what Tom was saying is that the first round was very, very chaotic. It was, let's get in. We're worried about the money running out. We were helping putting packages together. We're working with the banks. We're trying to get everything. So it was a crazy few weeks for sure. This time around, I got to say that the lenders, the financial technology, the online financial technology firms are all working very, very hard to make this a very smooth process. And so but there are some critical changes though that people may not know from the first time around. And so now what first is the Treasury has said there's going to be plenty of money. Okay. As of the other day, I heard only 25% of the funding has even been used so far. But the American Institute of CPAs, who's been very, very involved in this process, and said, Treasury, please release this comment, because this is what they were told from the Treasury, that there's plenty of money to relieve the anxieties. So that's one of the key changes around right now, is that just everybody needs to relax a little bit, because the Treasury is saying there's going to be plenty of funding. The next thing is just the forms of the documentation. So the 25% reduction, you do have to be able to support that. But they also now included in payroll costs additional insurances like the vision and the dental. That wasn't really there that first round. That kind of evolved over time. So there are some key differences there. But one of the things that you will notice is the process is slower from the point of accepting to the SBA through funding. The SBA has instituted a number of fraud checks in their processes. And these fraud checks, we all heard the stories the first time around that somebody went and purchased a Maserati with the funds from, or whatever the case might be, right? So we heard those stories, the horror stories. So they've instituted these fraud, and in fact, I just got a letter from the AICPA issued, the American Institute of Certified Public Accountants, asking the SBA to help provide some clarifications and to relook at what they're doing. They have over 40 error codes in their system, And what's happening is there's a great number of applications that are being denied right now because of these errors. And they're not denied because they're improper, they're just being denied because it's not working quite right. And some lenders are starting to shut off their submittal to the SBA until this gets fixed. In fact, the American Bankers Association issued some letters last week on this. They really need, so there's just these connection issues, and I don't want to put a lot of blame on the SBA. Keep in mind, a law was passed December 27th, and they're trying to institute a new program, and develop all that while also getting these applications going. So there is some fraud checks. So one of the things I would say is everybody just needs to be a little patient on how long it might take a few extra days. It might take a week longer than it did the first go around because of these fraud checks. The SBA, because the first time around, they were just kicking the money out to whoever put in an application, and we'll check later on the forgiveness. Well, unfortunately, if you've got fraud coming in, good luck trying to catch that down the road. So there's key differences. And one of the other things is, because of these requirements, some of the lenders have different forms that they're requiring to be filled out, different worksheets on revenue, different ways to, so not all lenders are exactly the same. It's not good, bad, or different. It's just a little different that you have to be prepared for. So to echo what Tom said, is talk to your lender, talk to your accountant, help get this information together, know exactly, and that'll make your process a lot smoother. Because one of the things I'm recommending is, when you have these different costs, make sure you make it easy for the reviewer of these documents at the lender or the SBA to go through it and understand how you came up with these numbers.
Yeah, so let me ask you a question though. If you're one of the businesses that ends up being denied because the information isn't accurate, or there was some component that you forgot to sign, are you able to reapply to make sure that you can get it in the long run?
Yeah, in most instances, the lender is going to resubmit for you. This is a known issue, and if the lender said, no, you've got everything here, there's a financial. We have a partnership with the AICPA with a portal we're using, and they have come out and said, we're going to resubmit. We know what the issues are. We know that we're going to have to take a look at the SBA actually knows it. The SBA, in some cases, even though they've been denied, I had a client denied because they were told they applied in 2 different lenders. Well, they didn't. They only went through one, and so that was just an error on that side of things, and that lender's going to resubmit it. So you just got to be patient with the process and understand, to some degree, they are trying to keep more money in and not the fraudulent money going out.
Right. It's good that they have the safeguards put in place now, right?
Yes, it's better for sure.
Yeah, and when it comes to the forgiveness of those loans, I'm sure that's like one of the key questions on everybody's mind today is, I'm going to apply for this loan. I may have to pay it back. It may be forgiven. How do we position ourselves so that in the event it can be forgiven, we're going to be able to get it forgiven?
Yeah, so similar to the first go around. So for those who are just getting their first round now, but if you're getting your second go around, you're familiar with the process. And one of the things I advised way back in early April is keep track of those costs as you go. Take those payroll registers and set them aside. Now, keep in mind, they also expanded, and I didn't touch on this, but they expanded the uses of these monies. So the first go around, it was payroll costs, it was utilities and rent and mortgage payments. Now there's lots of definitions under each of those and limitations and under each of those, but now they expanded it to supplier costs and software costs for say you have a ERP system, an MRP system, an HR system. So there's different costs. So now what happens is, if you think about it from a dollar standpoint, you're getting approved on 2.5 months of payroll. You've got up to 24 weeks, which is 6 months of payroll, right? So if you don't have any reductions in your full-time equivalents and you're able to keep everybody the same, I've been suggesting go use that 24 weeks, try to use just payroll, but keep your payroll registers all together. Keep your documentation as you go, and you can see how you're spending the money as you go. And then when forgiveness time comes, you're going to be very prepared to submit that application. Now, if you are going to need other costs to help fill that in, I suggested to many clients, make sure you take that invoice and you set it aside. If you've got retirement take that and set it aside as you're paying it. Keep a copy of it and a log, so that way when you're ready to go, you make it very efficient, very easy to get that forgiveness.
Tom, I assume you're sitting in agreement there. Do you have anything to add to that?
Yeah, most definitely. And one of the other things, I know that we have a lot of our clients that are kind of one-person show businesses, contractors, if you will, and PPP still applies to them. And hopefully folks have already taken advantage of it. But if they experienced economic injury and can go for the second round, again, to Mike's point, the documentation requirements are not as difficult as you might think. So your bank statements, your 1099, anything that you're going to be able to use to document that. If you're a single person, a contractor, PPP is still available to you. So, don't think you're ruled out just because you're a one-person show. And we did run into some of that in the early first round. People said, well, it's just me, so I don't apply. It's like, no, you do. And the requirement for documentation is not that heavy a lift. It's the type of things hopefully you're keeping track of on a regular basis. Just to Mike's point, stay organized, because when it comes to forgiveness time, it'll make your life a lot easier.
Yeah, it's a good thing you bring that up, because so often our home-based businesses or the, mom and pop shop where it's just the family working in it, they don't always think that they can apply for these kinds of grants or loans in general. If they have applied for prior loans, though, can they still apply for the PPP?
Yes. Well, I mean, if in terms of if they applied for, when you say applied for prior loans, if they applied the first time around and received the loan, or if they didn't get the loan for some reason, the other requirement in terms of applying for the second go around would be that you use all the funds from the first go around, which most should have used that by now. But to jump off what Tom was saying, we kind of refer to those independent contractors and those, the mom and pop shops as just Schedule Cs. Sometimes we just call them Schedule Cs because a lot of times they're not filing a separate tax return for their business. It gets filed on their 1040 in Schedule C, and absolutely we can use that. And on top of that, some Schedule Cs, you might see like retail locations and things like that, will have payroll. So you've got your Schedule C income that you can use and that payroll sometimes. So there's a lot of, if you're in business, if you're receiving those 1099s, the wide gamut of business and enterprises needs to take a look at this if they meet these criteria.
Mm-hmm. Well, I know like for the home-based businesses, often they don't have the same relationships with their bankers as the larger businesses do. So we want to make sure that we have the right information out there for them as well. And Tom, I know that your office will assist with those applications also, right?
Yeah, we've done a lot of it. In fact, it was my first year here, and it was like MBA on the fly, right? Because the first thing we had to do was help people with Florida bridge loans, PPP, EIDL. So we've become pretty versed in it, and so it's very helpful. So we're happy to help our clients walk through it. Again, we do urge, make sure, even if you're a very small business or an individual, make sure you do maintain a relationship with your lender, with your accountant, because that's going to be key. And yes, we can absolutely help walk them through it and take them through it, but those relationships are also important. So I really, really harp on that to make sure you keep your partners close to you, because even beyond relief and the COVID crisis, they're the ones that also help you grow and succeed in the future.
Sure. So I'm going to ask you both one question at the end, because these are the end of our prepared questions. But what recommendations do you have for the businesses that are struggling financially? And Mike, can we start with you?
Sure. So, I think, as always, it's when you're struggling financially, first and foremost, look at these programs. Talk to your accountant, talk to your lender, as Tom said, keep those close. Lenders, though, will often have the concern of crossing over, particularly in these programs, to be giving advice. They stop at that, but they'll give you the understanding of the programs that are available. And the SBA has emergency loans, and you can talk to, especially at the smallest business levels for sure, but talk to Tom and his team over there. They're going to help with those kind of things. So first and foremost, look at what resources are out there and available. There's a lot of resources available. Volusia County Economic Development, reach out. You guys will have resources. Go to your accountant. CPAs and your accountants, they often get exposed to so many different things, more so than most. And so they're going to see the different. They're going to be able to point you in the right directions. So then I definitely would. So get with your accountant. Get your things in order. There's new tax laws that came out for those who have incurred losses and net operating losses. There's new carryback provisions that you can go back 5 years. And last year we were filing a lot of amended tax returns and going and get some of these companies cash from, say, when they paid taxes in 2013 and 14 and 15. We went back and got them that cash because of the law changes. There's tax credits available for those employees that you might have been paying to retain. There's tax credits for COVID, employees that were out on COVID. So there's a lot of things that you first and foremost can go and get that information. And then I think, and certainly I know Tom's going to weigh in this, but then take a look at where you're at. How are you diversifying your revenue base if you can? How do you make sure that you can sustain, look at your budgeting, put your budgets together, your plan together to say, okay, how are we going to get through this next year in these circumstances?
Yeah, I think what I get from that, one of the key points is that working with a professional who's been doing this on a regular basis with multiple different entities, you have a sense of creativity that the average person wouldn't understand. That's a great response. And Tom, what are the suggestions you have?
Yeah, been an interesting year. I think we'd like to probably forget as soon as possible, but a lot of strange positives kind of fell out of it. And I guess maybe I'm always the glass half full guy, but for the folks that have survived it, understand that the Volusia County economic fundamentals, there was nothing wrong when COVID hit, and they're still there, still sound. There's a bright future. So I think as we pull kind of with vaccines now becoming more and more prevalent, more people getting vaccinated, as we kind of emerge from Q2 this year, I think we're going to see a tsunami probably across the board, especially for our friends in the hospitality industry. I think they're ready for it. So we're really talking to people right now. This is a great time you probably want to take a breather after 2020, but I would say don't do that. Let's put your strategic plan in place. Right to Mike's point, so many businesses found new streams of revenue out of having to do this, out of necessity. They also said, gosh, there's some stuff we're doing out there that isn't necessarily profitable. Maybe we shouldn't be doing that. It's too expensive. It's not to our core. So they've made some strategic decisions so that they can be stronger on the other side. On top of that, I've had a lot of honest discussions where our clients are going, I hate to tell you this, but I can't really even read my income statement. I'm like, Eureka, that's a great idea. What a wonderful time to really boost your financial intelligence. Not that you have to be an accountant. Please don't do that, right, Mike? But what you do want to know is what are those key indicators of your business that you can be measuring all the time and forecasting that directly contribute to the success of your business. You should know those. The people on your team should understand kind of their role and how they can affect those. So that's a great time for now. And then finally, people are like, that's all well and good. I have a bunch of bills I can't pay. What am I supposed to do? Well, you know what? Business is about people. So your suppliers don't want you to just go away. They want to keep doing business with you, and they're living in the same tough year you did. So I always say, go to your suppliers. Go to the people that are your partners and say, here's where I'm at. We need to work something out. You'd be surprised how many people are going, okay, well, when can we get paid? And you can work a way through what you're doing because it's going to be short term, right? And again, if you have that business plan going, look, this is where we're going. These are where our trends are happening now. This is what we're working on. Your suppliers and the people that you do business with on a regular basis, they're going to want to hear that. And not having you not call them, not reach out to them and say, yeah, we're having a tough month here, could be way more difficult discussion later on. So do those things, use it to your advantage, and then be ready for the tsunami of business that I'm predicting is going to happen probably as we emerge through and after Q2. So that's my commercial.
Yeah, that's great information. I mean, there's no doubt that chaos begets creativity, right? And we've seen that with so many of our local businesses, some that have really pivoted in their approach and others that have been able to just maintain and wait it out. So sometimes that's all you can do.
Mhm.
So we're going to go to some of the questions that we have now. We have a question that was submitted from Augustine saying, as a home health provider company, most of our workers are 1099s. We've lost some patients due to COVID-19, and some simply refuse care because they are avoiding contact with the caregivers. Both these things have resulted in a loss of income, and yet we're not qualified for PPP because we don't have a 941 form. Yet we write agency checks to pay our caregivers every week and month. Is there any way that we can qualify? Tom, can you help us with that?
Yeah, well, I'm not sure of the specifics, but given that scenario, it sounds like their revenue might be down. And,
Yeah.
and so they should possibly qualify. So again, I would probably have that discussion with their bank and their accounting to take another look at it, because it would seem that just on the surface, I'm not seeing their exact data, it would seem like there may be a qualification possibility. And so far as, and Mike can answer this part, but the 941 form, they probably should be filling out regardless.
Yeah, I was just going to, so 1099, when you 1099 people, those people who are receiving 1099s can also apply for the PPP, which is why why they left 1099s out of it originally, because you would be double dipping. However,
Right.
they say most of our workers. So that leads me to believe that there's some payroll that may be able to, and keep in mind, sometimes they don't have a 941 because they could be through an employee leasing company. Employee leasing companies still can apply for, even if your employees are leased, you can still apply for it. Generally, you got to get a letter from that leasing company as support for why you don't have a 941. But even then, as a business owner, you can still, if you have payroll or you have your income supplemented through, say, a K1, maybe a partnership, that can still qualify. So there's some more nuances to this that I don't know that we have the full story, but if their revenues are down, it seems like they should be able to get something on that.
Yeah, I would think so. And again, you're giving out our contact information. So if they need specific guidance, that's what we're here for. We'd be happy to help out any way we can.
That's great. Okay. Laura asks, I had gotten an SBA loan last year, but my work has pretty much stopped these past few months. Would I be eligible to apply for a PPP loan or grant if I got the SBA loan last year? Tom.
So, yeah, I'm not sure what the SBA loan would be, whether that's a 7A, which is a conventional SBA loan, or if they're referring to the emergency injury disaster loan, the EIDL loan.
Yeah.
Regardless, neither of those are mutually exclusive. Lots of businesses received an EIDL loan that also got PPP. They are completely separate programs. So they should be fine. But again, I'm not sure without more detail.
Okay. So now Tamara has a question. My question is how to qualify when your business structure is an LLC with 2 equal partners and no employees, such as a small restaurant. We filed our taxes for 2019 and we did not receive a Schedule C as a typical self-employed person, but instead got a Schedule K. In all of the application links, we were asked to provide a Schedule C. Is there a way in which we still qualify that we can, maybe we fit other criteria? Mike, this sounds right up your alley.
Yes, and the answer is yes. Provided that if you didn't apply the first time around, you would definitely qualify for the first round. If you applied for the first round, received the first round, spent the first round, and your revenues are down by the 25%, as we discussed previously, you would qualify for the second round. Now, what you're going to do, and perhaps it's just how you click through the application links, because it can be kind of tricky, but you file a 1065. And so what happens, I assume, since you mentioned your 2 partners and you're an LLC, I assume you're filing as a 1065, but that's not entirely clear here. You receive a K1. That K1 flows from your business down to your personal income tax return. That K1 is the key. There's box 1 on that K1. and you take that box 1 and you back out box 12 and 13, and there's a little bit of formula that gets you there. But based on your K1, you can apply for the PPP loan. That's your version of payroll income replacement. And that was what it was meant for. And you can use your 2019 K1 as the basis to use your 2.5 times. So I'm not exactly sure why it's asking for a Schedule C. I suspect perhaps it's based on how you chose the entity type as you were going through the process. But you certainly can use your K1 in a case of a 1065. If you filed your LLC as an 1120S, generally speaking, you should be paying yourself some payroll out of that as opposed to the way you would handle it as a partnership. So again, a little more specifics could help tweak it, but you certainly would qualify.
Okay, and as Tom had said before, we are going to be providing the contact information for both of you. So you may be getting phone calls after this. Another question from Doug. I opened a second store in 2018 under the same SCorp as my original store. As a result, the business does not show a 25% reduction in revenue in any quarter. If I would have used a separate SCorp, I would have qualified. We were greatly impacted by the pandemic, and while revenues were up due to the added store, overall they were lower than the prior year on a store-by-store basis. So while my total revenue was up, my overhead was also doubled because of the added store. How do we qualify for the PPP2? Mike, this is again like you.
Yeah, unfortunately. So when they came out with the rules, they did allow certain industries to look at multiple locations in terms of employee counts. But when you look at it under a single EIN in terms of the revenue, there's been, it's that EIN, that federal ID number that's under one company that is really what you're looking at. So unfortunately, I do think without being down 25%, I'm not aware of a way that you would qualify under the scenario placed here. I know it's a difficult situation, but they've not defined anything else that allows you to break revenue down by different locations. And you're exactly right. If it was under a separate EIN, you would have a different scenario that we're talking about here. But because you do have one entity, they're looking at it as revenue for all the combined
Overall net. Oh, that's too bad. So we have had a few questions come in while we've been on the webinar as well. Heather, do you have those questions for us?
Yes, I do. Okay, this might be for Tom. Our first draw was forgiven. We applied for the second draw through our bank portal on the 19th. If all is approved, when should we expect loan proceeds?
Not sure. It just kind of opened up, and they sound like they're Johnny on the spot. So bravo, they've done all of the things they needed to do. As Mike said, it's probably they're going to be dotting all the I's and crossing the T's at their lender. It probably shouldn't be too long, but not really sure. Hopefully their lender might be able to give them a little more guidance, but it sounds like they've got their act together, so it shouldn't be too long. But it really just opened in earnest this week and last week. So maybe just a little bit of patience and reach out to their lender.
Okay, great. Next question. If you received an idle advance that has to be paid back, should that be identified as an outstanding loan in this round?
Mike, I'll let you go. That shouldn't be paid back.
So the idle advance, one of the nice things that happened in the law that got signed on December 27th is those idle advances that were previously required to be sort of netted back are no longer going to be required to be paid back. And if you already paid yours back from the first round, because what happened, I'll just use an example. Let's just say back in March, you received an idle advance of $10,000, and then you got a PPP loan for $100,000. What they said is, okay, now you've received 110,000, we're going to forgive 100 and you're going to pay back 10. Now, what happened in December when they passed this law, they said, we're getting rid of that requirement. So it's not going to, you're not going to have to pay it back. If you already did, there's procedures coming out from the SBA to the lenders on how that's going to get credited back to you. So from this point forward, the idle loan is not something you need to worry about in terms of repayment or including as part of your PPP loan forgiveness application or anything else.
That's great.
Okay. Next one, difference between idle and PPP. I am a sole proprietor and received an idle loan of $1,800, thinking I would have loan forgiveness if used 75% towards payroll of income lost as a result of COVID lockdown. Am I mistaken? Would this program benefit me?
Yeah, they are completely separate. So the idle loan, or again, emergency injury disaster loan, they were super favorable terms, 30 years at 3.75. And that is one that you are responsible for paying back when those payments start. And it has nothing to do with how you use the proceeds. They're supposed to be used only on working capital purposes, but that is totally different from the requirements for the PPP, completely separate programs.
Okay,
Yeah, I
great.
would just add to that, you know, we just talked about the idle advance. Then there was the loan program under idles that was, the advance would be theoretically not required to be paid back now, the rule changed. And there was the idle loans that have terms, as Tom just mentioned. But I did hear, I think you said in that description, payroll costs is 75% under the PPP. The rules changed that the PPP must be used for at least 60% payroll. So the remaining 40% can be other costs. So that's just a clarification on that.
Right.
Okay, this one, I noticed that the application asked if the individual or the business has been through bankruptcy in the past. It says you don't qualify. Is it still possible to qualify for PPP if the individual has been through a bankruptcy, but the business was not part of that filing and is not impacted?
I don't know, Mike.
I can't remember the specific requirements. That's one I'd have to look up. I haven't seen it much, so that I'd have to get back to you on, and we could look that up and maybe shoot you guys an email if you want to respond to that person after the fact.
Yes, we will. Okay, and last question. Hi, Angela Miller from Benedict Advertising. What would you suggest if you had purchased the company in 2019 and banks had changed over? Will the bank still work with me and get me the statements I need? I've reached out to my current bank asking if it was in the application getting the loan last year, and he said no. I have now reached out to my accountant. Any suggestions?
So she purchased the business in 2019, and she's looking for financial statements from the prior entity.
Will the bank, the old bank, still work with me and get me the statements I need?
So I would think that that's going to be that's a privacy issue. However, hopefully when she bought the bank or bought the company, she has financial statements and maybe some paper statements from the buyer. But I don't think that you can go back to someone else's bank account and be able to secure records. I don't think. I might be off base, Mike.
Well, there's also rules that you have to look at, so this can get a little bit more complicated. So you might be able to reach out to the seller and help get that. Depends on how the terms of the, if it was a stock deal, then yeah, absolutely, you go back and get it. If it was an asset deal in terms of the purchase, then you've got to go back to the seller perhaps. But you know, if you have a changeover in the business in 2019, there's also different rules about what happens if you started your business at a different point in 2019 and how you can qualify. So you may actually dig a little deeper into the rules of 2020 versus 2019 to see if there's something else that might be where you don't have to get back to that very first quarter. So there's definitely some nuances to how you deal with things when you have a purchased business in 2019 and how that can go. So it might be it sounds like you reached out to your accountant already, which is a great place to start. They should be able to guide you through that. But you know, if anything else, I would reach out to the seller and see if you can't get that information from them, or to get their permission to reach out to the bank and get that information.
Okay, those are all the questions submitted.
All right, well, you know what though, guys, you're not going to get to go yet because 4 more came in on my side over here. So we're going to hold you a little bit longer if that's okay.
Absolutely.
Laura is asking, a nonprofit, as a nonprofit council center, we've been overrun with requests for services. We've probably increased our revenue or stayed near last year's. However, we've needed to bring on more providers who are working longer hours. What are the requirements for demonstrating financial impact? As a nonprofit, what documentation is required up front and will need to be retained to qualify for the payback or for the forgiven payback?
Well,
Mike?
yeah, I'm gonna assume that perhaps they're talking about a first round loan. Perhaps they didn't apply the first time around because they've got the same requirements for the second round where the revenues would have to be down. So that's why I'm going to assume we're talking about a first round here. Now, one of the things that we heard a lot about was economic uncertainty. And what does economic uncertainty mean? There's not been a great definition of economic uncertainty. But let's get back to the point of the PPP, and that was to keep people employed. The people on your payroll, keep them employed. And the economic uncertainty was based on the idea that the industry you're in is facing revenue reductions. Your employees were you were having issues with employees having to go home to take care of family members, couldn't generate the revenue, things like that. When your revenue is up, it's tough to make that economic uncertainty. Now, you as a nonprofit, you may be faced with reductions in contributions and donations and things of that nature. So you really have to look at what is happening in your business and what is your risk that you're not going to be able to keep people employed. And that was really the whole idea of the PPP, was to help keep these businesses surviving. So, so I think when you're looking at the financial impact, you got to look at where are you going, where are your revenue sources? Are they going up? Are they going down? Are they being strained? Are your employee bases being strained because they need to leave? Those are all the things that you really need to look at. In terms of, what's required up front, it's the same as everybody else. You're going to want your 990 from the previous year. You're going to want your payroll records to support your payroll costs as you're doing the application. And the same thing on the forgiveness side of things. You're going to need 941s and payroll records and any invoices that you might have used to qualify those costs, those other non-payroll costs, such as utilities and things of that nature. So if you get to the point where you qualify, that's what you'll need in order to apply and then ultimately be forgiven.
Great information. All right. Serena has reached out. What do super small businesses have available to them? So this must be a home-based business. For instance, a husband and wife handyman business. They were able to get the county's $15,000 grant through the CARES Act funds, but now they don't seem to find anything available.
$1,500.
Sorry?
1,500, not 15,000, just to
Oh,
clarify.
1,000. Oh my goodness, 15.
That's a good grant.
That's a big difference.
Yeah.
So, but what's available to them now? Tom, I think you've already touched on this a bit, right?
Yeah, so I don't know what their revenue picture is, but if they suffered revenue loss below that 25%, they can apply for second round PPP or even first round if they didn't do it the first time. And that would be available as an individual. Or if both of them work, they're both 1099s, it's potentially possible, or if one is a W-2. I'm not sure the circumstances, but that may be available to them. This is a good example of, I'm not really sure what else you do, but if you're in the handyman business, for instance, might be a new way to look at your strategy, because think about other companies that, or other industries that may have had to reduce staff. So maybe in the hospitality industry, there might be properties that haven't been able to keep on all of their maintenance crew. Might be a good way to just kind of tap out to them and just say, hey, what can we do for you? You always want to focus on the client's need. Could be that HOAs of certain neighborhoods may be in the same ballpark. They just don't have enough people to do all the work that needs to be done, and they can do it affordably and on a temporary basis. So it might be a matter of kind of re-strategizing, thinking about, well, how can I market myself and my professional capability to other clients, new clients that may have a need that wasn't there before. So just kind of, really getting a little cerebral about what you do well, combining that with what people might need out there. So, maybe it's a little bit of both, looking for any avenues of relief, but also maybe re-strategizing for what you do well and where you think new needs might be.
That's great. Okay. Next question. Do I qualify if I had more than a 25% loss in revenue on my first quarter 2020 compared to my first quarter 2019, but did not have a loss during my second, third, or fourth quarters? Mike, I think this sounds like it's one for you.
Yes, and the answer is yes. So the requirement is you only have to have one quarter that's at a loss of 25% or more compared to that same previous quarter. So no matter what the other quarters did, that's your requirement. Now, I will jump back on and say you do have to meet the other criteria, the 300, you have spent the loan proceeds from the first round, but then also you have that economic uncertainty. And, like I said, that economic uncertainty is going to be very different for everybody and what that means. And the first time around was very, who knows, we were all facing a lockdown. We didn't understand what a lockdown even was what did that mean? What is it going to mean for any business? This time around, some businesses have done very well in the third and fourth quarters, and some are doing very well to start off the year. So that's one thing. Others are just starting to see, and we were afraid all along that there were many businesses such as contractors, manufacturers who were going to chew up their backlog and be okay in the second and third quarters of 2020. But then we started worrying about the fourth quarter and then the first quarter 2021 as projects are getting pushed off. And I was just talking to a contractor yesterday where right now it's kind of like the recession back in 10, 12 years ago, where it's a race to the bottom for bids, right? They're putting in the lowest prices, so it's hard to get those jobs at good, reasonable profit margins. Those are things that represent economic uncertainty. Restaurants and hotels facing diminished. Those are examples of economic uncertainty. So it's just one more piece to make sure that you've got to certify that you're there. And like I said, it's different for every business, but that's just one other factor to consider.
Okay, great. So we have another gentleman who says, after applying for and being denied due to a low credit score, which was COVID-19 inspired, should I try again? My credit score is a bit higher now, but it's still not great. I'm going to leave that open to either of you.
Yeah, it might be an idle loan he's talking about. I'm not sure which. They did reduce the credit score minimums. You can reapply, or you can go back to the service center, which is, by the way, they are really very helpful, just to kind of see what the status is. But I'm not sure, Mike.
Yeah, I would say, try applying for a PPP. I don't think the credit score was really coming into a factor on that. So if you didn't get a first round PPP, certainly take a look at that. If you did get the first round, then look at whether you meet the criteria for the second round. And yes, I think looking at some of these other programs, if you were able to increase your credit score, certainly look at them. But I would first and foremost start with the PPP and see what you might qualify for that, because that's effectively, as long as you meet all the requirements, that's a grant in all reality. And so that's let's just call it free money to support keep your business, keep people employed, keep your income replacement without having to get some loan that you're going to have to repay back. Now, it might just be the buffer you need to get to a certain point, and that's kind of the goal. But certainly look at your cash flow needs beyond that, and then say, okay, maybe you will need some sort of favorable loan, maybe something through the SBA. And it sounds like Tom could really and their group could really help guide you through that piece of the program.
Yeah, absolutely.
Yeah. Okay, Heather, you have one more question?
I have one more question, and unfortunately, she's not able to hear this, so I'm going to have to hope that she can reach out to either of you later with any more specifics. Her question was, can a business qualify for a PPP loan if the business is an SCorp, but the owner doesn't take payroll? The owner only takes draw.
I had issues with that on the first go around. We did some research on it, and the lenders would not accept that. I couldn't find, if you look at the definitions of payroll costs for an SCorp, it does not include draws or distributions. in all reality, as a corporation, being separate, being very distinct from an LLC or partnership, where everything, not everything, but there's self-employment income there, not to get too technical. On an SCorp, you really should have some level of payroll. But my experience in the first go around was draws were not going to be allowed through the process.
Okay.
Okay,
Well-
I'm sorry, I was typing about that. But that was all the questions that we received.
Okay, great. Well, Tom and Mike, thank you again so much for all of the advice and information that you've given through this. And Heather's going to put your contact information up for everybody so that they can reach out to you directly. Personally, I can tell you, if I had to pick 3 things out of today's conversation that resonated most with me was, 1, all businesses qualify, whether they're home-based, single entrepreneur, or larger. It's best to work with your professionals so that you can be creative in your approach and how to do it. But then most importantly, there's plenty of money. I think one of the biggest fears that I've heard has been, do I have to rush to the table? I need time to prepare my documentation. And just the knowledge that there's money out there and that you have time to do it right and, submit the correct information the first go around is very helpful. I don't know if either of you want to add anything or to the closing. Any thoughts?
Yeah, I'm glad to be here. Thanks for inviting me. And yeah, again, one of the things that we've seen is that a number of our folks that needed the PPP first draw, it really helped them to get through. And actually, the tail end of the year, they did well enough that they're actually not going to need it. So they're really pushing forward to a much better 2021. So let's wish that for all of our businesses in the county.
Yeah, I'll just echo. I appreciate the opportunity to be here and talk about this. We're spending a lot of time on it, but I would just say, yeah, be patient. There's, the SBA I know is working hard. All of our lender friends are working extremely hard. It's very difficult, a program of this magnitude, to have a new law passed and a month later be getting money out the door as quick as they have been. And I can tell you, I've had a number of clients already receive funding. And some that are still waiting, even in the approval. So just stay patient, keep talking to your lender, keep talking to your accountant, and I think that will come through for you.
Great. And I'd like to thank all the attendees for joining us today. Be sure to stay tuned for upcoming Economic Scene Live webinars. We're going to have professionals, hopefully as good as these guys. We'll share the dates and times in the near future. In the meantime, be sure to follow us on Facebook, Volusia Business Resources, and check out the resource website, volusiabusinessresources.com. Thanks so much and have a great day.